Let's look at some of those banking stocks on the NSE right now. We did have KCB coming out with some rather positive results in yesterday's trading session. We saw profits up about 43%. We also saw net interest income up about 31%. What did you make of those results?
I think they were very resilient numbers from my view. But obviously, we just have to raise some issues with some of those numbers, specifically from a quarter-on-quarter perspective. And one of them, obviously, is the bottom line. EPS went down 10% quarter-on-quarter. And if you look up there, top line, actually, operating income was actually down on a quarter-on-quarter basis. So in my view, it shows something. That either the bank is actually is on a risk-off strategy for the better part of this year, or the market is just tough. Because if I actually even look at the bank's books for the beginning of 2012, I think I have seen some sense of a risk-off strategy. Actually, the bank is actually kind of de-risking some of its books, because specifically I'm looking at the total risk-weighted assets as a composition, as a percentage of total assets. I think as at Q3 it was about 67% compared to 80% last year, and also if you look at the loan to deposit spread, it's at about 60% from a high of 76% last year, and it shows me that the bank is actually on a risk-off strategy. And I think I would be happy and not happy at the same time, just due to those two key observations.
What do you make of the other banks right now? They're on the NSE. Could we see some similar results are coming through for them? And perhaps talk us through the current valuations that you see and which banks you find most attractive right now.
I think generally the first 3 quarters of this year has been tough for the banking sector because this is principally due to the interest rate environment, the dancing nature of the interest rates environment for specifically the first 2 quarters of 2012. We saw this feed into the banking sector operations, and the results, specifically results Q2 and Q3, will still be flat in my view. In my view, I don't expect a substantial growth in both top line and bottom line. And specifically, if I saw it from KCB, KCB is the biggest, has the biggest asset book in this town, and so in my view, it's probably one of the indicators in this market. And I saw that the bottom line was kind of flat, the top line is flat, and I think I expect more flat numbers as the banks continue to release their Q3 results. So I'm not exactly bullish on the numbers coming, specifically from a quarter-on-quarter basis.
So what about the fourth quarter? Could things change perhaps? We are seeing that interest rates are heading even lower from these levels.
I think if you look at the interest rate at the moment, there was a short downward correction on rates, but now they're edging up. I mean, if you look at yesterday's auction for look at the auction for the 91-day T-bill, and you look at the 2-year auction, the bond that was auctioned on Wednesday. The central bank is actually picking these bonds at a premium. I mean, on a month-on-month comparison, they actually applied a 40 bips premium on this month's auction. And if you look at even the market-weighted average, it was almost 13.5. And people are getting more aggressive in this market. And the central bank will be under continued pressure to pick these papers at higher yields. And I think, in my view, we are still looking at yields above 15% in the next quarter.
Well, George, let's move it away from Kenya a bit and look at some banks over in Nigeria. What do you make of the banking sector there? When I spoke to you a little earlier, you were pretty positive on the likes of Access as well as UBA.
Yeah, true. If you look at specifically the Nigerian banking sector, I mean, look at where they are coming from. It's been pretty much a dark period they're coming from, and now they're actually emerging out of the woods and trying to sanitize their books. And, and you also realize that the central bank, the Apex Bank, and the policymakers in that market, they've really tried so much to help banks emerge out of the woods. And so specifically, if I look at the existing market infrastructure for the Nigerian banking sector, it gives, actually on that basis alone, I would actually assign 10 to 15% premium on the valuations of those banks. And I think, and I'm saying this principally because if I look at from a financial markets point of view, the funding structure from an interbank perspective, and if you look at the structure of the money market and the structure of the bond market, it's a one-way, and it ensures that banks operate in a profitable environment, even if they don't take the real risk of lending into the real economy. So you will realize that the Nigerian banking sector, the lending to the private sector has actually been stagnated over the past 4 years. But there's still, the revenue, the top line is being driven up by the participation in the money market and the bond market. So I think the structure is quite robust. Nigeria runs a very robust three-tier OTC bond market. The financial market is well structured by, and this is by the aid of the Central Bank of Nigeria. So I think, looking at the current existing infrastructure, I think I would say that I'm still bullish on the Nigerian banking sector going forward.
As opposed to the Kenyan banking sector at this stage?
I think, not really, not looking at that point, but yes. Yes. I am looking at the interest rate environment, the dancing nature of the interest rate environment in this market. I think the Nigerian sector, there's a bit of stability in the interest rates. I think this year, we've looked at the rates oscillate between 13 and 15%, and it's been constant. And the fact that JP Morgan finally included Nigerian debts into its WGBI bonds index, I think that is even the icing in the cake. So I'm still more bullish on the Nigerian banking sector.